Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The Taiwanese index is now trading with gains of close to 1%, but the Hang Seng is trading with losses of around 0.5%.
India has been a good friend, but India has charged basically more tariffs than almost any other country.
And the resistance is 24,998. We put that level out yesterday as well. Only once the market gets above that, you can say that maybe the decline is complete. To begin the day, we are above the 25,000 mark. That's good to note.
NSDL doesn't operate in isolation. It's locked in a duopoly with CDSL.
We see that the significant market, India, continues to grow, and so does the global market.
The performance, so to say, is coming in on the Midcaps. So that index is around 0.3% as we speak.
We have been growing better than the industry average.
The acquisition is likely to be around $4.5 billion.
It's the Midcaps which are under pressure right now. That index is down 150 points.
Okay, it's a very, very busy day as you sort of saw a sampling of the day so far. This is Closing Bell. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Surabhi and Reema here, and Nigel is joining us from the newsroom floor. Guys, good afternoon.
Hi, good afternoon. Busy day, but still very range-bound when it comes to the index today.
And so much news flow, right? You've got L&T on the way up, still going strong, 5% higher. Tata Motors on the back of a potential acquisition, down nearly 3.5%. Look at the reaction in KPIT Tech. That stock is flying, 5% higher. There is news in Avenue Supermarts. And M&M has said that the numbers will now be today post-market hours instead of tomorrow. So it's all happening today, Nigel.
Well, that's right. And good to see, right? I think in the last 24 hours, you've had close to around 8 to 10 earnings reactions that are positive. Asian Paints, L&T, as you mentioned, KPIT Technology, the stock that has fallen 35-40% from the top. That is well fairly positive. Smaller names, GE, Vinova, you had a Hind Rectifier. The stocks have given you 10%, 15% in a matter of 2 days. So at least some encouragement coming in there, because still Monday evening, I recall that everyone was moaning and groaning that these numbers are not looking good. Last 24 hours have been good. Let's hope this form continues.
Moaning and groaning.
True, right?
You're right. You're right. Anyway, let's quickly run our viewers through what's lined up here in the next 60 minutes or so. Lots of stock-specific action, as Nigel said. So you've got Avenue Supermarts rallying on the back of optimistic commentary. Management highlights prospects of doubling down on increasing its store count while ramping up investments for the same. Tata Motors is the next one, top laggard on the Nifty Street, weighing a $4.5 billion acquisition of Italian truck maker. L&T, from the word go, has been doing good on the back of very strong first quarter numbers. Margins, so not really an issue so far for the market, at least today. Order book is in focus. And of course, the pharma pack is in the spotlight. And this, of course, after Novo in the US session overnight raised concerns about too much competition as far as weight loss GLP drug segment is concerned. So that is essentially what's coming up here. Lots of previews as well. Mahindra & Mahindra should be out by 3:30 today, as Reema just said. Tata Steel and Interglobe are the others, which will post after market hours. So we'll get you previews going forward as well. I think just a quick word on the Nifty 24,872. It's all about single stocks, but I'll just say one thing. You want the market to, I think intraday, right to the word go, we did cross the 25,000 mark or roughly there. 25,000 is a 61.8% retracement of the decline, the recent decline. You want to close above it, and then perhaps the market starts to look a little better, starts to look a little higher going forward. So that's the picture at this point in time. Let's quickly run you through some trades. Mitesh is joining us with what he'd want you to do. Mitesh, good afternoon. Tell us on the Nifty, on the headline indices and specific stocks, what are the trades?
Yeah. Good afternoon, Prashant. So on the index, as you rightly said, not much is happening. We are not getting any kind of a strong reversal signal as yet. And my belief is that we might even go to about 24,950 or levels. That's where the first pivot comes in on the upside. And then beyond that, even 25,250. But it looks like a market which might just, spend some time in this range of 25,250 on the upside broadly to about 24,550 or thereabouts. So it's a market which is not giving direction wise. But given the fact that we are oversold, the PCR is kind of on the negative side, you can still trade, with a positive bias, at least if not on the index, on the stock side. So in that sense, I have a buy on Sun Pharma. In fact, Pharma as a pack is looking pretty good. So Sun Pharma is a buy with a stop at 17.15 for targets of around 17.70. And the other one is Tata Communication, which I would recommend buying with a stop at 17.44 for targets of 18.10.
Got that. Let's talk about Avenue Supermarts. That's surging in trade. Mangalam is here to tell us more. Mangalam, there was an analyst meet.
There was an analyst meet, and in uncharacteristic DMart way, it was extremely aggressive, because what were one of the quibbles that the analyst had about the company? That they are not expanding stores fast enough. And that's exactly what the company said, that, they are going to accelerate their store expansion. In fact, 10 to 15% addition every year is what they are going to see to their overall store footprint. And that has the street fairly excited. The stock is seeing an up move of almost 7% right now. And more importantly, they said that they will accelerate their store expansion, particularly in the northern part of the country. Remember, we had pointed out when they opened their first store in Uttar Pradesh, Maine, that, this is the first of many that is likely to come there. And this is exactly what will happen. For all those who are worried about what Neville Narona, the current MD CEO who steps aside for Anshul Asaba, will do, Neville Narona will be the one who will lead the company in terms of its North India real estate expansion over the next few months. So that has the street fairly comforted as well. And they will double down on investment on store expansion, considering what's happening around, and more importantly on quick commerce as well. So they're not going to compromise on return metrics. And there is case for DMart stores, offline stores, to take place. The only thing that the street was worried about, that they aren't expanding fast enough. And here, the company has said that they will go ahead and expand fast enough. The stock had been under pressure. It's been a beaten down name. Every time quick commerce does well, DMart's the one that gets impacted the most. But now, after underperformance on that counter, some aggression shown from the management, see the result. It's up 7%.
Oh, absolutely. And what a move today from Avenue Supermarts. Mangalam, thanks very much for putting that in perspective. Well, let's discuss this and more with Prakash Diwan, who's with us on the first leg of the show. Prakash, great to have you on. So that's the real question. We haven't seen DMart do this in a long, long time. Not sure if it's just the management change or the hope that, things are past the bottom. What's your sense? And now, at such levels, do valuations offer some comfort at least?
Good afternoon, Sylvie. So I think the first thing is this time around, they're singing a tune that the market loves to hear. So that's where the market's celebrating this sort of announcement, a slew of announcements. But to answer your question on valuation, I think it's still expensive, given the fact that all of this is going to take much longer than what you would love to see on the numbers. When the results came the last time around, just a few weeks back, it was very clear that DMart will have to reinvent itself if it really wants to justify the valuations, which have always been premium. And any softness in valuation would become an opportunity to buy if you are looking at all of this to pan out in the next 18, 24 months. But whether to buy it at 7.5% up move, the answer is you could probably get better levels as well. So I believe it's great. The story becomes much more robust. But the time to open up the book and read the story will probably be a bit later once the market digests all this exuberance.
Got that. By the way, look at KPIT Tech. Now the numbers are fairly disappointing. The company has reported a revenue decline of 3.2% on a quarter-on-quarter basis. And this is the first revenue decline for the company in I don't even know how many quarters, perhaps not in the last 4-5 years, since the auto ER&D space started picking up momentum. So numbers are disappointing. In fact, many estimates, I have estimates from JP Morgan, Kotak, they were penciling in a revenue drop of 2.5%. So 3.2% is lower than expectations. And the margins, the way we calculated, have also dropped. Again, this time, the company has not given a full year guidance. Remember, KPIT would always give you an annual guidance. But in Q4, 3 months back, again, citing uncertainty and the corporate behavior, etc., they decided to abstain from giving a guidance. They've not given a guidance, but what they have said is that we're confident of growth in H2, led by our top 25 clients, and expect to have growth momentum as we exit the year. So the numbers, to my mind, are weaker than what we were anticipating. But clearly the management sees things are improving. It's a negative growth of 3.2%, but they are seeing growth coming in the second half of the year. And maybe that is something that the street likes. And anyway, remember, the stock has been a bit subdued in trade. But that's about KPIT Tech. Let's talk about M&M. That's all set to report numbers later today. Sudarshan now joins in to tell us what the street is expecting this time. Sudarshan, do we know first why it's been advanced?
So I assume that one of the directors of Mahindra & Mahindra has passed away, and that's the reason company has decided to advance its board meeting that was scheduled for tomorrow. Now the board meeting is today, and the company will be most probably announcing earnings around 3:30 p.m. So how the earnings will look like? We are expecting a steady set of earnings from Mahindra & Mahindra. Revenue would be led by healthy volume growth, and tractor business, that is going to, so basically healthy tractor mix will lift the margin. If you talk about the headline numbers, profit is expected to increase by 22%, might come around by 3,180 crore. Revenue too may see an increase of 26%. EBITDA can jump by 23%, and margin may remain healthy and can come in above 14%. It may come in at 14.5% versus 14.9%. Remember, in passenger vehicle segment, one segment that continues to see healthy growth, that is the SUV segment. And SUV forms the entire PV for Mahindra & Mahindra. That's the reason its volumes remain strong. So overall volumes for Mahindra & Mahindra in Q1 were up 13% year-on-year and up 14% sequentially. That includes tractor also. If we just talk about the auto volumes, that were down 2% year-on-year, but on a sequential basis, here also the volumes were up almost 17%. And if we talk about the tractor segment, tractor volumes have increased by more than 50% year-on-year and up 10% sequentially. Now, recently we have seen that so many companies have taken price hike, and that's the reason realization is seeing just a fall of 3% year-on-year, but on a sequential basis, there might be a significant improvement and can come in around 10% higher than the last quarter. Now, in the commentary, what exactly would be focusing on? First, what does company say about the demand ahead of the festive season, and how is the demand looking for, especially for tractor segment, and if there is any inventory or on the discounts, what does exactly company say? Because it would be the first company after Hyundai that would be reporting earnings in the auto sector.
Okay, all right, got it. Thanks very much for that, Sudarshan. Indeed, it's been the flag bearer of the auto sector, Mahindra & Mahindra, the one stock that has consistently created wealth, despite the environment being very, very uncertain for overall autos. PVs included, stocks spiking even as we speak. Prakash, well, this has been your favorite. I keep saying that, I keep repeating. 2 years back when we spoke about it, it's over 800 rupees. It's been a phenomenal journey. But people always wonder, I mean, how much more? Is it more? Is it too late? What would you say?
I think should be the growth is still very, very clearly visible, and it continues to promise and hold a lot of promise. I don't see any reason why, if it's become like 3x or 4x from where we discussed a few years back. In fact, it's the tractor segment that I'm so positive on, and given the fact that this time the monsoon has been timely and fairly well distributed, imagine what happens once those numbers start kind of adding up. And you have another player in that space, Scotch Kubota, which has kind of taken a little bit of a pause in terms of getting their house in order. But M&M marches ahead with Agri. It has a great traction that it's been able to generate on the EV pack. And remember, they are the ones who are the most insulated from any global vagaries. You have no issues whatsoever related to exports and tariffs and all of that. A lot of the other players struggle, whether it's Maruti, whether it's Tata Motors. So you have a domestic play. You have a management that's very focused on growth and on margins. I don't see any reason why this. Of course, we'll wait for the numbers to be more specific in terms of what to anticipate on the stock. But absolutely greatly poised for a run that will continue for the next 12, 18 months as well.
Okay, all right, got that. Let's focus on the other auto name then. Tata Motors, that's the top Nifty loser. Talks have emerged that Tata Motors is a potential, Tata Motors and Invico could be in a potential deal. Parikshit joins us to break that down for us. Parikshit?
Well, this deal has been in the works for the last 1 year, and Tata Motors has been looking to buy a controlling stake in this Italian company, Iveco, which is a large CV maker with 70% of its revenues coming from the European market. Now, what will Tata Motors get with this? Well, it'll get access to key export markets in Europe, North America, and Latin America as well. It'll get access to futuristic technology, which is important for the company going forward. This deal is likely to take place at $4.5 billion. We believe that both sides will come up with an approval today. When Iveco was reached out to, they said that talks have been in advanced stage to sell both their defense business and their commercial vehicle business. The commercial vehicle business is, of course, going to be acquired by Tata Motors from the Agnelli family of Italy. So we're hoping for an announcement to come in the next few hours, but this will be the largest ever announcement by Tata Motors after the acquisition of JLR.
Okay, all right. Thanks a lot for that, Parikshit. Prakash, what do you make of it? You know, automakers, steel makers, where they go to bite big, the market punishes them. You know, you have Tata Motors that's under pressure because of that. The street believes it's being too aggressive. But as we saw last week, for an alcohol company like Tilaknagar Industries, they can go and have a big bottle. You know, they are going for an asset that's far larger than their size. Let's leave Tilaknagar aside and that deal. Tata Motors, will you view it as a negative?
So I'll tell you, Nigel, the reaction of the street is more out of confusion, more out of anxiety. I don't think there's anything proven yet or empirically establishing a negative impact of this proposed acquisition. But given the fact that Europe is slowing down globally, it's going to be difficult to muster a market share footprint of IC engines, particularly on the CV sides. You know, there are a lot of questions, and it brings back the fears that Chorus, the acquisition of Chorus made. You know, when you do something very large, it takes years to make sure that everything goes off right. So I think they've just managed to get a balance sheet which is leaner, and this will end up kind of, reversing that. So from that perspective, it's a lot of concern. But I don't think it's too early to call this as negative. But I would believe once you get more details, things will probably be clearer. This is a reaction. This is more of like stay away till things get clarified. So that's the thing. But I don't think it's right to call it negative at the same time.
Yeah, we need more numbers, far more clarity in terms of what that asset is like, debt levels, etc., sales, turnaround. Need a lot more information, and hopefully we'll have that if this indeed comes through. Stay on, Prakash, we have to talk about the Nifty winner today, and that's L&T. It's finally come out hitting all the right notes in the first quarter. Strong numbers coming in, top line growth, margins are steady. And of course, that order book is looking better and better. Vivek is joining in. Vivek, so what's the verdict? I mean, the price action really tells you how happy the street is.
Absolutely right. You know, going into the results, what is the key concern? Number one, order inflows, especially given the fact that falling oil prices was something that the street expected could lead to lower orders as far as West Asia was concerned. Clearly, that is not the case this time around. So what is the key points to watch out for, especially as the earnings takeaway is concerned? Number one, the order inflow is much above what the street was anticipating. And this does not include the order that the company actually mentioned in yesterday's press release, which was a mega order that they received again from a West Asian client. The good part is this time around, they managed to bag one large BTG order. This is from the domestic market. So robust order inflows, execution has been quite strong, quite steady. The only blip, of course, has been margins haven't expanded. The core margins haven't expanded to the guidance that the company has given, but the management has not revised the guidance, indicating that they continue to remain confident that Q2 and H2 execution will be good with higher margins. Consolidated order book extremely strong, has crossed 6 lakh crore. So revenues higher by 15.5%, EBITDA higher by 12.5%. Margins the only blip, around 30 basis points lower on a year-on-year basis. The consolidated margins, profitability higher by 30%. Now the core EBITDA margin, something that the street tracks very closely, has come in at 7.6. What is the management guidance? The management guidance was at 8.5%. So 90 basis points uptick is what the management has to make up for in the remainder of the 3 quarters. Console order inflow, as far as this particular segment is concerned, at 77,000 crore rupees, up 41%. Remember, the management guidance is just about 10% for FY26. Two important numbers to cap. Number one is the order prospect pipeline. 14.8 trillion is the order prospect pipeline for the remainder of the 3 quarters. And also, one important development as far as divestment of non-core assets is concerned is the Nabha power plant. The company says that in case they get a bidder at the right valuation, they are open to divesting this particular asset.
Thank you very much for that, Prakash. L&T, after this 5% up move, numbers look fine, strong deal wins, steady execution. But margins, as Vivek was pointing out, still a bit of a sore point. After this gain, where do you stand on L&T?
So, I probably might sound a bit biased in a favorable way that even after this run-up, I don't think L&T is getting its fair due in terms of market price valuations. If you recall the quarter earlier than this is when the numbers came out and we were in the midst of Operation Sindoor and the market mood was not so robust enough to reward it. And actually, the stock hasn't done anything from that quarter to this quarter. So it tells you that the price hasn't started penciling in a lot of the salience that the numbers speak. The internals are so positive, and if you keep adding the optionalities, particularly from the defense side, from the shipbuilding side, there's so much that we've not yet seen get converted to realization. So when that happens, of course, the margins will also improve. This is at an expanded book that you probably see the margins suffer a bit. But I really won't be worried about this on a quarter-on-quarter basis because the long-term trajectory from where this company could go to, I think it's still kind of undervalued. So there's lots that's available. And remember, a lot of the ETFs would want to park themselves into this once the money comes into India. And as and when that happens, you'll probably see a very sharp re-rating. So good times to look at if you buy on this current level or buy on dips. You can choose your risk reward, but essentially a very good spot at which it rests at the current moment, given the numbers and the strength going forward.
Okay, all right. Prakash, we'll leave it there. Thank you very much for running us through all of those names and your views as well. Always appreciated. Markets, by the way, are up about 48, 50 points still. Just a quick reminder for our viewers. Unlock a world of exclusivity and expertise, influence, become a member of CNBC-TV18 Access, our premium members-only experience on CNBC-TV18.com. Membership includes access to the flagship events, interactions with our journalists, along with curated studio tours, e-learning sessions and masterclasses, curated lifestyle benefits as well. So go check it out on the website, CNBC-TV18.com.
Welcome back. Shares of New India Assurance are flying in trade. I think it's up 13-14% on the back of their numbers and positive management commentary. Yash joins in. Yash?
Well, the numbers were posted by the company post markets yesterday. The stock was positive in today's morning trade. But then the management commentary happened at about 12:30 to 12:45 thereabout, and it was pretty strong. I'll take you through the internals of that management commentary. First of all, as far as growth itself is concerned, the premium growth, management expects FY26 premium growth to come in at 15% as compared to 6% that happened in FY25. They also expect a combined ratio improvement of 300 basis points. Now, of course, as far as the internals are concerned, what we spoke to the management exclusively after the con call, the management expects health loss ratios to reduce by 2 to 3% in FY26. This could happen on account of A, move towards retail health, and second, repricing of health portfolio. Second one, motor loss ratio is expected to reduce by 2 to 3% again in FY26. That could happen because of movement to passenger vehicles from commercial vehicles. Also importantly, commercial lines, which is fire, marine, so on and so forth. The management expects, reduction in loss ratios there between 6 to 21%. The expectation from the management is that for FY26, the loss ratios in commercial lines could come in between 75 to 90% as compared to 96% in FY25. Finally, some qualitative remarks coming from the management as well. They expect Health Ministry to take certain steps to regulate hospitals in the country, which could be beneficial for the health insurance portfolio. They also expect significant improvement in incurred claims ratio in FY26. Finally, they expect some movement in terms of increase in motor third-party premiums coming in FY26 in some shape and form.
Yash, thanks very much for that. That's an excellent sort of summary of what the management has said, and the stock is excited. But just FYI, as Nimesh points out, there is, the free float in the company, publicly available shares to be traded is about 5%. 95% is locked up. Government and insurance companies own 95% of New India, and the public float is only about 5% or so. So be mindful of that when you look at very sharp moves, not just with New India, but for any company with such small free float out there. Hormuz is here as always with the unusual movers. Hormuz, over to you.
Plenty of earnings reactions today, but there are some interesting names in this list as well in today's session. Look at Bliss GVS Pharma is the top gainer on the BSE Small Cap Index. It's the biggest single day gain now, this 18% move that it has had since August of 2021. And it has seen over 1.5 crore shares already traded at this time of the day compared to its 20-day average of just 3.2 lakhs. So another volume-led mover. Foseco India is the other one, is the second straight day of gains. It was up 2% yesterday. It's up 12% today, and it has already seen 1 lakh shares already traded compared to a 20-day average, which is just 2,000 shares. So it's not a very liquid name, but still it's seen very strong volumes in today's session. Redington is an earnings reaction. It's down almost 7% after the results, and it has declined already in 5 out of the last 6 trading sessions now, and it's close to 45 lakh shares already being traded compared to a 20-day average of just 12.5 lakh shares. So it's a volume-led mover. On the downside is Redington India. Some of the others in this list is Pennar Industries, and that too is among the top losers on the small cap index today. It's declined in 3 out of the last 4 trading sessions, but it has delivered healthy returns to its shareholders every single year since 2020 in terms of positive annual returns. And I don't want to puncture the excitement around this name, but New India Assurance, of course, Yash just mentioned what is happening to the stock. But despite this 15% move, the stock is still down on a year-to-date basis. And ever since it listed in 2017, the stock has delivered negative annual returns every single year starting 2023. So it currently trades at around 200 rupees. The IPO price was 800 rupees. So it shows the value erosion here. Less free float, of course, as Prashant just mentioned, but there are some of the movers in today's session, most of them heavily volume led.
All right, Hormuz, thanks very much for that. Very, very sort of tight list of stocks that we need to keep on our radar. Deepak Shenoy is with us, founder Capital Mind. Deepak, good to have you with us here on the program. Thanks for joining us. Deepak, do you have a strong view on markets themselves? Generally, there is a sense of apathy. Earnings are coming through mid-cap. I mean, especially when you parse through specific stocks, there are some rockets out there, very strong numbers. But otherwise, overall, there is a sense that maybe, things are going to stay, just sideways for a while. The point is, if there's no real trigger, the direction of travel perhaps could be sideways to slightly lower. The last decent correction we had was started in September of 2024, and that was about 15% or so from the highs then. Could we see something like that?
Prashant, actually, it's been quite one of those challenging things. The market doesn't like to go down too much, despite a war, etc., etc., etc. But at the same time, you have, no good news seems to be taking up the market as well. So I think there's a bit of fatigue. Usually it happens during there is a downturn. There is a bit of a consternation towards the last high, and until people are exhausted of both the selling and the buying, as long as that is there and there's no fresh triggers in place, markets generally don't show their trend meaningfully. This is actually usually a very good time from an investor perspective, because when everything is uncertain, that's when you're getting some cushion on valuations in certain either stocks or sectors or even in the broad market in certain categories. So you should always invest, or look to invest at a time when markets don't know where they're going, and then perhaps as trends form, then you can actually increase as time goes on. But I expect another few months of this back and forth behavior to sustain, after which I think we'll see a trend. I hope that trend kind of comes in towards the end of the year.
By the way, those are Power Grid numbers on the screen, and first glance, they don't look too great. Top line is lower than estimates as well. The EBITDA figure that we were working with was around 9,600 crores. We'll just see what the company has done. Profitability is also slightly lower than estimates, and the stock is seeing a sharp slide now as we speak. So it's not been a very great quarter or good start to the year, at least it looks like, for Power Grid. Deepak, hi, good to be speaking with you. Since I'm just discussing the stock, I know you don't talk individual stocks anymore, but I mean, the reason why this stock has been liked by a lot of people in the market is that it's seen as a great way to play the whole power cycle, because while with generators there could be problems here and there and you decide whether renewable or thermal, the grid always needs investments, and you need a strong grid irrespective of what is the kind of power. And so therefore that disappointment is showing up on the stock now because the numbers are not that hot. Do you like power as a space? And if yes, where would you place your bets?
That's a good question, Surabhi. I think the problem with power has been there are too many areas, right? There's the power producers, there's the transmission, there's the grid, there's the financing companies, and so on. By and large, we've found that power is going to be one of those sectors which will play a huge role going forward. And given India has got kind of a little more diversified in whether it is the sources of power go from coal to as much as nuclear to natural gas and a couple of other places, solar, and the generation sources have changed. That needs a more robust grid, because solar is going to be very highly operating during the day, wind is going to be operative during certain seasons, so you need a grid to be more efficient. So grid companies by definition should be interesting, but I don't think they will be allowed to be ridiculously profitable. I mean, 80% profit margin is already ridiculously profitable. But I think overall, we should not expect that because they end up becoming a grid, that they will be allowed to make supernormal profits. That over time, their monopolies will force the government or other players to bring down margins to more manageable levels. And this, I would say, happens to pretty much anyone who has monopolies in any space, whether it's a stock exchange, a power exchange, or anything like that. Over time, things will change. So I think you have to have a spattering of investments in distribution, in transmission, in grid, in finance companies. And the power sector by itself is going to be a huge source of growth in the next coming years. I don't think you can bet on any one of these to say this will be the only place that will grow.
All right. Hi, Deepak. Good afternoon. Good to see you in. What about the large insurance company that you have been tracking, the government-owned one, the life insurer? I think you had a positive stance on that. Do you continue to hold on to a positive stance?
Yeah, I mean, of course, now we're in the mutual fund, talk individual investment. The PMS continues its investments. I think the life insurance space is relatively, has not grown as meaningfully as it should have. But I think whether it's a large public life tract investments, both from people who are going into life insurance as an investment, and also, the mutual fund space and the few other investment spaces there are. So primarily, they will ride high on, capturing more from the investment part of insurance. Unfortunately, that is, significantly why people put money into insurance plans as well, that they want their money back. Whereas mostly in life insurance plans, you don't want your money back because that means you're dead. But, in India, it's a different source of income. So I think as much as we've seen more and more companies are moving towards non-participating policies, more and more companies are moving towards whether it is ULIPs or others, the scope of this remains interesting, but I haven't seen the growth yet. It will take, I think, another 4 or 5 years for this part of the sector to grow meaningfully. Though profit growth for some of the largest insurance company has been very robust. We've seen that 40 or 50,000 crore profit come in. It's just not translated to high dividends for shareholders or anything meaningful from an acquisition perspective yet. So let's see where that goes. I still think the sector has a lot to hold.
Deepak, thank you very much for joining in today. By the way, the 2 new listings, it's a tale of 2 cities. IndiCube Spaces is down nearly 8-9% as we speak. This is a company which provides flexible co-working space. And on the flip side, G&G Electronics, which basically sells refurbished computers, second-hand computers, they refurbish it and they sell it under the brand name of Electronics Bazaar, is having a pretty good session, 40% up and still counting. But let's get a handle on the futures and options space and the trends there. Mangalam joins in.
Well, the market's consolidating. The Nifty is mildly higher, but that's about it. It's just mildly higher, facing some sort of resistance as we move closer to that 24,900 mark. That's exactly what is taking place in the F&O space as well. So if you look at, the frontline indices, the Nifty, and the Nifty Bank is the one which is struggling to cross past its 50-day moving average. The Midcaps, by and large mixed. You have almost as many number of stocks which are advancing as the number of stocks which are declining. So if you look at the active options as we move towards the expiry session tomorrow, the 24,900 call, those writers are fairly active in today's trading session. But because there is some support that we are expecting, the 24,850 put writers are equally active as well. So 24,900 call, premium of 50 rupees, telling you that upwards of 24,950 as we move towards 25,000, there could be some sort of resistance. And at the lower level, the 24,850 put has a premium of 50 rupees as well. So between 24,800 to 24,900 is where the narrow range is what the street is anticipating that the Nifty could consolidate. Either move or a move on either side, or the way up or down, would determine where the trend moves in tomorrow's trading session. But more importantly, a large number of open interest is at the 25,000 call. So if the market sustains above the 50-day moving average for the Nifty, we could see some short covering. But speaking about the 50-day moving average, the Nifty Bank, the 50-day moving average is just about 200 points away from where that index is right now. So 56,376 is an important mark to conquer and stay above for any sort of up move. Through the day, a lot of stocks are in focus. The last hour or so in particular belong to D-Mart. The stock is zooming ahead, up around 7.5% on the back of aggressive commentary coming in from management in the analyst meet, and a lot of long positions being added on that one. And KPIT Tech reported its numbers. The stock zoomed ahead. A lot of shorts were caught on the wrong side. So there is some short covering pop that one can see on KPIT Tech as well. So consolidation for the frontline index, but a lot of individual stock movers is the order of the day when it comes to F&O.
Thank you very much for that. And as we get into break, remember to tune in to the all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders, economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts, their impact on Indian businesses, giving you unparalleled insights. So tune in to CNBC TV18 Prime every day, 12 noon for the Global Reset and 1 p.m. for the Big C and Global Lens at 8:30 p.m.
Welcome back. Well, keep an eye out on BEL. Ria's on that call and she's trying to get in further details. But as of now, we've got the initial commentary that's coming in there. The management says they're awaiting the request for proposal for quick reaction surface-to-air missile. And the fear was that it's going to be delayed. But now they're saying they're confident of receiving the order in Q4 FY26, and it may not slip into the next fiscal year, Q1. So, just keep an eye out on that one. We'll get some lines as well from the con call. That will flash for you on the screen. But we are having a green day. And it's time for D-Street Chatter. Nimesh joins us to tell us what is he picking up. Nimesh, how are you reading it?
Nigel, a decent pullback in the last couple of days. And we've been pointing out, right, every time when the PCR goes to 0.65 odd levels, you see a pullback. For technical reason, but it pulls back. And that's what it is. Not much in terms of momentum. This market clearly lacks momentum now, largely on back of lack of institutional buying. Even today, the flows are quite mixed, is what I understand. Again, there are sharp reactions to earnings, and that's likely to continue. But I guess the bigger worry or the biggest concern for the market seems to be the Indo-US trade deal. That's something which we don't have a clarity on.
Yeah.
And I guess that's why the market is a bit nervous as well as to what's going to come there. From a sector point of view, I guess it's the PSUs which continue to outperform. Even today, I understand there is selective buying in the PSU basket. So that's the trend. But overall, there is lack of buying momentum. And that's why you're seeing a very range-bound trade for the last couple of days.
All right, interesting. But individual stocks continue to remain in focus. As you said, earnings reaction, stock-specific action. What are you picking up?
So in terms of individual names, the first on my list is Saurashtra Cement, something which Nigel tracks very closely. It's been buzzing in trade today, big move, 11-12% up, large volumes as well. And the city is penciling or anticipating some corporate development very soon. So that's the first stock there. The second stock is Premier Energies. That's been buzzing post-earnings. But again, I understand the flows have resumed and there is buying interest from large institutions in premium energies today. So that's the reason why that's buzzing in trade. The third stock is Camlin Fine. It reacted very sharply on the downside in the last few weeks. But today, the stock is locked at 5% upper circuit. I understand the selling pressure from a leading PMS is largely over, and hence you've seen a bit of a reaction on the upside today. And the last name is AU Small Finance Bank. For the last couple of days, some bit of momentum has picked up. There is volumes as well and delivery-based buying. And I understand a leading domestic mutual fund has been a buyer of late in AU Small Finance Bank. So that explains a bit of uptake in that stock in the last few days.
Okay, interesting list, Nimesh. Thanks very much for that. So there is a bunch of stocks to keep an eye out on. Mitesh is back with us with what to buy or sell today for a reverse trade when we come back tomorrow. Mitesh, what do you have?
Prashant, Asian Paints, I've been liking the stock since last few days. The stock has completed a correction and is now, getting into some kind of a bounce back mode, if not starting of an uptrend. So Asian Paints is a BTST for me. Take a stop loss of roughly around 2400 and look for target in excess of 2450. And L&T, I think, very clearly good numbers and the price reaction is good as well. So L&T is something which should gain in the coming few days. So BTST here as well. Keep a stop at 36.55. Look for targets of 36.85.90.
All right, got that. Well, before we get to Tata Steel, just a quick word on Saurashtra Cement, which Nimesh spoke about. They have a plant located in Gujarat. Rough capacity is around 2.8 million tons. Why is this asset good more than anything? It's got good limestone. So, whoever is the candidate, in case someone is looking at it, well, that's going to be, the big selling point. And also on a rough EV per ton, it trades at around $55 to $60 per ton, even a little bit lower actually than that. So just did a rough math on that particular asset. As Nimesh says, Street is anticipating something. For the time being, large volumes, stock bursting away. Let's focus on the number that I'm going to be tracking later this evening. Tata Steel. The numbers are going to be important, but commentary is going to be even more important. Top line, there'll be a degrowth because volumes have been a little bit softish and pricing as well on a year-on-year basis have been soft. However, EBITDA number will be do better because there'll be a recovery in profitability in Europe as well as in India. So margins will improve. Let's run you through the key factors. For the India business, well, volumes will be down because they had a maintenance shutdown and also exports were curtailed in the past quarter. However, the realizations will improve by around 2,500 rupees per ton, particularly on flats, which they have a fair bit of exposure out there. Input costs will decline as well. Coking coal costs should come down by close to around $10 per ton. So put this together, the India EBITDA per ton will come in the ballpark 14,500 rupees per ton. Europe, well, it'll continue to struggle, but at least it'll start moving towards the break-even line. For Europe, Netherlands will give you a better EBITDA per ton, maybe around $40 per ton, while the UK business will continue to struggle, though there'll be a lot of fixed cost reduction out there. So put the piece together, that's Europe as well as UK as well as Netherlands, put it together. Europe could deliver a minus $5 per ton to a plus $5 per ton. That's the broad range. We'll also keep an eye out on commentary, demand, pricing, debt reduction. Those numbers due, I think, by around 6:30 to 7 p.m. later this evening. But the other one that we'll be getting, far sooner than that is Interglobe Aviation. Vinny joins us to give us a quick preview. Vinny.
Hi, so for Interglobe Aviation, also we are expecting a weak set of numbers in Q1 FY26 this time. The revenue growth expected at 8%, EBITDA margin 8% growth on a year-on-year basis, while EBITDA margin, that is also EBITDA, we are expecting a 6% growth. Now, in terms of yields, they are expected to come in at 5.11 rupees per kilometer, which is a decline from what we saw in the last year, 5.24. What are the factors impacting the numbers this time? We'll see the impact of India-Pakistan border issues. The other one is going to be of the plane crash that took place in Ahmedabad. That was an issue. Other than that, Middle East geopolitical tensions and developments and rerouting of flights, that also became a concern for the company. So 3 major issues that came in during the quarter. Now, obviously, what we're watching out for is going to be in terms of the net profit, because that is expected to see a decline versus last quarter. You would see that decline. Why? Because Pratt & Whitney compensation, that is going to be lower now from this quarter and onwards. There was tepid demand, so overall some bit of a subdued performance because of that as well. And key factors that we'll be keeping an eye out on, update in terms of geopolitical tensions, what are the demand trends, air traffic data points, as well as in terms of air ticket prices as well. Other than that, aircraft on ground will be key to watch out for. They've brought it down significantly. Now, what is the target for FY26 will be a key factor to watch out for. And the performance of their business class as well as the loyalty program will be an important factor. And international expansion plans is also key for Interglobe Aviation.
Okay, all right, Vinny, thank you very much for that. Numbers later today. So Tata Steel and Interglobe. I mean, we've had, 10 numbers since we started, 2:30 closing bell. Just a flood of earnings coming through. We take a break here. We are back. More market conversation on the other side. Stay tuned.
Welcome back. Well, the markets are trading with a gain of just around 30 points or thereabouts. Number of stocks advancing, a little more than the number of stocks declining. But a couple of stocks actually are doing well. We had Welspun Corp. The numbers look quite good. The con call as well. The management is indicating that they can probably supersede their guidance. And the other one is Hind Rectifiers. We're talking about a market that's not doing much. That stock is up close to 30% in 2 days. Mayuresh Joshi of MarketSmith India joins in on the show. Hi, Mayuresh. What do you make of this one, Hind Rectifier? I think you have a view. I recall covering the stock and, explaining it to our viewers for purely educational purpose at around 200 crores. Boy, oh boy, today it's around 2,500, 2,600 crores. And it seems they're promising and delivering those numbers as well. But it's not cheap at all. Your take?
Afternoon, Nigel. No, absolutely. I think the kind of moves that the stock has delivered is prima facie based on numbers. And therefore, if you look at this quarter's numbers also, I think the top line growth was steady state. Margin performance, whether you call year on year or quarter on quarter, from 10.7, 10.8, the margins have come in at 11.3 odd percent. And again, the order book is steady state at 1,025 odd crores. Obviously, I think the line of businesses that they are into, railway transformers, is largely a large component of their business, contributing 58%. You then got the railway electromechanicals, which is almost 21, and then the railway electronic part. So I think a large part of the railway orders that probably come through, and the super specialization that Hind Rectifier probably has, is working wonders for them. Obviously, I think in terms of expectations of numbers going forward, with the execution of their order book, with the expectations of benign input costs, margin should be steady state. But you're absolutely right, Nigel. From a valuation perspective, on a price to book, I think it is very, very expensive. On a price to earnings ratio, very, very expensive as well. And it doesn't give that many dividends. So I think the entire premise that one really bases their argument on in terms of superlative earnings growth, that might continue, but valuations still remain way too high for this stock.
Okay, got that. Stay on. We just want to quickly talk about the rupee, which is now at a 4-month low. Lata's joining us with more. Lata?
Well, it has been a rather sharp fall. Rupee has been one of the worst performing currencies for a month now. And today it is again the worst performing currency, about 0.75% lower. We rarely see a 1% fall in the rupee. It's almost there. And other currencies have also fallen. But, the Thai baht and the Korean won are all about 0.3, 0.4. This is a sharp one. And that's obviously the mix of events. Crude prices going to $72. Dollar index up about 0.3. It's at its highest since June 23rd. These factors are contributing. But the bigger factor really is this incessant, relentless foreign portfolio investors selling. And they are selling not just equities, a point which the equity market doesn't notice. There has been incessant selling in bonds as well. And that has only worsened. Even on the trade front, there is a bit of a worry whether the trade deal will come or not. And added to that, our services exports, which are doing very well, have just lost a little bit of sheen because of what the IT companies are telling us and the kind of results they are reporting. So kind of forward outlook of the currency also is getting a bit of the sheen going off. And, there is again a bond sell-off on fears that the Reserve Bank policy may not be all that dovish and it may not be worth buying bonds at this point in time. So it's just a perfect storm that's going for the rupee, and it doesn't look like the storm has blown over.
Absolutely, that FPI point is well taken, Lata. Thanks for joining in. 14,000 crores of selling in July now. That's what we've seen so far. Okay, let's quickly, do we have time for a question with Mayuresh? Yeah, I think we can quickly squeeze in a question. Mayuresh, some IT stocks are managing to spike, like a KPIT Tech, and, otherwise it's been a washout season. Are you being a contrarian and buying anything in IT?
Afternoon, Surabhi. No, again, I think a couple of names that we continue holding in our global portfolios are Emphasis and Coforge. Our own sense is that largely the result season for IT has been very, very disappointing, along with commentaries. But I think both these companies gave decent set of numbers. And again, I think the kind of work specifically that Emphasis is probably doing when it comes to AI, which obviously has become a huge buzzword, they have been investing in specific domains over the last few quarters, and their investments are actually started to pay off. And therefore, I think, in my opinion, emphasis is something where our belief is that earnings can still continue holding out very, very strongly, even in the next few quarters. A large part of the pool in terms of the earnings matrix will probably come through not just from existing clients, from client mining that they're probably doing in new geographical areas as well. So I think expensive stock, but again, one stock that we continue holding in our global portfolios.
By the way, Mayuresh, just coming to you, just a quick tease out, right? In a short while, my colleague Shireen will be in a conversation with Salil Parekh, top boss at Infosys. So that's coming up in a few minutes from now, 4 minutes or so, and counting down. That's a conversation you don't want to miss. IT. It's all about IT and what's happening in terms of the future, AI, jobs, everything. So that's a conversation which will come up in just a bit from now. Mayuresh is with us. Mayuresh, the other sector I want to just quickly talk about is chemicals, right? And second day running, big move. I'm not sure if this is regards to China announcing cuts in capacity, but it's a whole new set. Zuari, Coromandel, Sumitomo, Vishnu Chemicals, IOL, a stock like Epigral, which is up 7-8%, Vishnu Chemicals, and I could go on. 2 days is running now.
Absolutely, Prashant. And I think it's a combination of both the factors put together. One, I think the news related to the Chinese part, which probably has given a fillip to these stocks. But again, I think better monsoons this time around and expectations of better throughput coming both in terms of volume offtake as well as farm gate prices remaining strong with input costs remaining benign. I think that's a good combination to have if you're probably looking at better operating performance. Now, with better monsoons, the expectation is largely that even the Rabi season can be better off as well. And therefore, the next few quarters for agrochemical companies might be better off as we speak. And therefore, this is one space that we have remained extremely constructive on at Markets with India. Stocks like Coromandel, Deepak, Paradeep is something that we continue holding in our global portfolios. Our own sense is that volumes, steady state margins should show steady state improvement as well going forward. And therefore, reported earnings should probably be better off in the coming few quarters as well. So yeah, remain constructive on agrochemicals. 30
seconds response slightly unfair, but M&M will report shortly. Indigo will report post-market hours. Any thoughts on these two?
So continue remaining constructive on M&M. I think the expectation largely is that there should be steady state volume growth, specifically in their key domain of SUVs. The tractor segment should probably hold up as well, again, with better monsoons holding up. And therefore, the consolidated performance should be better off. So again, from a compliance perspective and a disclosure perspective, M&M and Hyundai India is something that we continue holding.
Okay, all right, Mayuresh, thank you very much for that. Let's quickly wind down what's been another quiet day of trade, very range-bound. The Nifty finally going home with a gain of just around 25 to 26 odd points. Today's winners definitely included an L&T. Actually, not just L&T, even beyond the index, the numbers from GE, Vernova, T&D inspired a lot of confidence. It's pulled up a lot of the MNC capex stocks up with it. Siemens Energy, Hitachi Energy, Schneider Electric, all of these stocks are up between 5 and 6%. So that whole industrials complex was looking good in the market today. Beyond that, some buying in Sun Pharma, Tata Consumer, NTPC up about 1% after reporting numbers. Maruti Suzuki and Trent, these were some of the other key gainers. No clear trends on the financial side today. Some of them like IndusInd Bank, Shriram Finance, Kotak, they were all lower. The weakest stock of the day was Tata Motors, 3.5%. Street a little nervous ahead of what could be a big Italian acquisition for the company. Prashant.
Well, I would say it's a neither here nor there kind of a close, 25 points. So if you're looking for direction off of this session today, you won't find very much. But I have to say that broader markets, doing their own thing. Lots of it, of course, is as well. New India, by the way, was the top volume traded name today, on the NSE. And there's 5% float in New India. So just quite incredible. It'll be interesting to see number of shares traded relative to the float out there in the market. Should be pretty high compared to anything else out there. DMart and a few others doing pretty well as well. So that's essentially the market today. Didn't really go anywhere. Just under 25,000 is where we left off, and that's an important technical level that we've been sort of highlighting as well. As promised, let's now toss across to Shireen Bhan, who is in an exclusive conversation with Infosys' CEO Salil Parekh. Shireen, over to you.
Well, this is the big story this week. The Indian IT industry is again at an inflection point. There are new opportunities, but there are also challenges in the form of AI. Infosys is the only major IT company in India to report revenue growth in the first quarter, and I'm talking about the Big Five. Infosys saw sequential growth of 2.6% in constant currency terms. All other tech companies in the Big Five saw their sales contract. Growth is moderating across the sector after a